SpaceX is worth $350 billion. That's what the headlines say. That's what the press releases say. That's what every finance journalist who wants continued access to Elon Musk's PR team says. And none of them will tell you what I'm about to tell you, because the real story behind SpaceX's valuation isn't innovation, it isn't rockets, it isn't even Mars. It's you, not you specifically, but the version of you that sees SpaceX IPO trend on Twitter in 2027, opens your brokerage account, and buys in at the peak of the most carefully constructed liquidity event in modern finance history. You've likely never heard this framed this way, because the financial press isn't incentivized to tell you that the greatest space company of our generation, and I say that with total sincerity, is also structurally a brilliant scam. Let me prove it. But to understand SpaceX's valuation, you first have to understand how private company valuations actually work, because they don't work the way you think. When a public company is worth $350 billion, that number is tested every single day by millions of buyers and sellers in an open market. When a private company is worth $350 billion, that number comes from one investor, usually a sovereign wealth fund or a Tiger Cub hedge fund, writing one check at one price, one time. That's it. That's the whole valuation. It's not a market, it's a negotiation. And the number that comes out of that negotiation gets picked up by Bloomberg and reprinted as fact. SpaceX's last funding round valued it at roughly $350 billion on about $10 billion in annual revenue. That's a 35x revenue multiple. For context, Boeing, an actual aerospace company that builds actual rockets, planes, and holds actual government contracts, trades at around 2x revenue. So either SpaceX is 17 times better than Boeing, or something else is going on. And here's where the mainstream explanation starts to break. The standard story is SpaceX deserves a premium because it's a tech company, not a defense contractor. It's growing fast, it's disrupting legacy aerospace, and it has Starlink, a satellite internet business that could be worth more than the rocket division alone. That's all true, and none of it explains a 35x multiple. Because here's what SpaceX actually is, beneath the branding. It's a government contractor that has received over $15 billion in NASA and DoD contracts. It is, structurally, a defense company, the same category of business the market values at 2 to 4x revenue. The tech premium in SpaceX's valuation isn't coming from its fundamentals. It's coming from one thing, Elon Musk's face on the cover of a magazine. That is a real asset, by the way. It's just not a durable one. And this is where regulatory capture enters the story. SpaceX doesn't just compete in a market, it shapes the market. Musk has direct relationships with federal regulatory bodies. The FAA, the agency responsible for approving SpaceX launch licenses, has been historically outmatched by SpaceX's lobbying and legal infrastructure. That's not a conspiracy theory. That's documented in congressional testimony. What it means practically, SpaceX has a structural moat that isn't replicable. It isn't technology, it isn't first mover advantage, it's political access. And political access is not an asset you can put in an IPO prospectus. Now, Starlink, here's how it works. Meet Sarah. Sarah lives in rural Montana. She can't get fiber internet. She signs up for Starlink at $120 a month. Multiply Sarah by 4 million subscribers globally, and you have a real recurring revenue business. That's the bull case. That's why fund managers say Starlink alone could be worth $100 billion. Here's the bear case. Starlink operates at thin margins because launching and maintaining a low Earth orbit satellite constellation is extraordinarily expensive. The only reason Starlink's unit economics look clean right now is because the rockets launching its satellites are built by SpaceX itself, meaning SpaceX is quietly subsidizing Starlink's costs through internal transfer pricing. The moment SpaceX goes public, and those business units must stand on independently reported financials, you'll see exactly what Starlink's margins look like without the subsidy. And so will the SEC. Here's how this ends. SpaceX IPOs, probably 2027 or 2028. The valuation will be somewhere between $400 and $500 billion because it will be the most hyped public offering since Meta. Retail investors pile in. The early institutionals, the ones who bought at $80 per share in 2021, sell. The sovereign wealth funds sell. And what remains is a $450 billion aerospace and government contracting company with a 30x revenue multiple, a founder splitting his attention across 5 separate companies, and a Starlink division whose margins were only ever made possible by a subsidy that no longer legally exists as a public entity. SpaceX is a real company. The rockets are real. The engineering is genuinely extraordinary. The valuation is a story, and the last person to believe a story is always the one who ends up paying for it.